Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. We talk a lot about commodity type investments or anything with a large asymmetric bet. I may start getting a little bit more into technology companies because the S-curve adoption rates look absolutely insane. I also do a lot of technical analysis on this channel. And one of the things that we look for are these things. And I'm going to show you what I look for in technical analysis. We'll touch on some of the most basic chart patterns that we see and have seen and get you guys up to speed. So when I do my technical analysis updates, you're not kind of in the dark. You can kind of say, hey, look, I saw this in one of the presentations. I kind of know a little bit about it. So I'm going to go over some technical analysis and some chart patterns here. I call this technical analysis. This is just a basic one. So what is a flag pattern? A flag pattern is a technical analysis, is a price chart characterized by a sharp counter trend, the flag, succeeding a short-lived trend. And I can show you what that looks like. Just be patient. Flag patterns are accompanied by representative volume indicators as well as price action. Flag patterns signify trend reversals or breakouts after a period of consolidation. So how flag pattern works. Flags are areas of tight consolidation in price action showing a counter trend move that follows directly after a sharp directional movement in price. And don't worry, I'll show you all this in some charts. Flag patterns can be either upward trending, bullish flag, or downward trending, bearish flag. The bottom of the flag should not exceed the midpoint of the flagpole that preceded it. So the characteristics, there's 5 characteristics of a flag pattern. The preceding trend, the consolidation channel, the volume pattern, a breakout, a confirmation where price moves in the same direction as the breakout. So let's look at them. Let's see what these things look like in the volume. So this is the bullish flag pattern, came up and went sideways in this pattern. Here's the flag. And then you can see that the volume kind of comes up and then comes down a little bit like that. So that's a flag pattern. And then it comes back in a higher volume. Same with the reversal. Kind of comes up, goes kind of sideways or down in the flag, then it punches out down, goes downward. This is a bullish pennant and bearish pennant. It's very similar to the flag patterns, except they just form these pennant formations or triangles. It's a contraction in highs and lows. And this is Appia, real time. You can see this thing in a big flag pattern coiling up. It could pop to the downside, could pop to the upside. Usually it goes in the direction that it came from, so it was going up with the pole. It was a consolidation period, and then it's probably going to break to the upside with some volume here. You can see the volume coming up, peaks, and then goes sideways down. We've got the cup and handle formation. A cup and handle is a technical chart pattern that resembles a cup and a handle where the cup is in the shape of a U and the handle has a slight downward drift. A cup and handle is considered a bullish signal extending an uptrend and is used to spot opportunities to go long. Technical traders using this indicator should place a stop buy order slightly above the upper trend line of the handle part of the pattern. This is what the handle chart pattern looks like. Classic cup and handle pattern estimating continuation. Boom. Here's the handle. And this is what they've got for the projection on, at least for this. What I usually do is it's from here to here, and then I project it from this point up. But that's a cup and handle and what it looks like. This is gold price. This is a cup and handle formation. It came in from the left-hand side upward. It formed a huge cup, and now we're forming a gigantic handle. When will this handle bottom? Not exactly sure. Some people are saying 1600 down here is a price that we could potentially get to. I don't necessarily have an opinion on that. I just say we're in a cup and handle pattern. We'll see when it breaks. And then I look for short-term indications of when we could potentially punch through to the upside. I cost average in. I'm a long-term investor. I'm not a trader. So the trend line. The trend line is a line drawn over pivot highs and under pivot lows to show the prevailing direction of price. Trend lines are a visual representation of support and resistance in any time frame. Here is an uptrend with higher lows and higher highs, and a downtrend, lower lows and lower highs. This is some chart patterns just to show you. Usually you've got long wick on the bottom. This is a hammer, and it's a buying opportunity if you're coming from a down to an upward move. I'm going to kind of show you how to tie this together in a chart. We're coming on up. We've got a couple of things going on here. We have a pennant formation. We have the flagpole. We've got big up days and then the smaller down days kind of going sideways. We've got remember the wick on the bottom, another wick and hammer here in this one. So we came up, bounced, came up. We're in this pattern here, came back, and we're still in this pattern for SunPower. So we're looking for a break to the upside for SunPower out of this pennant formation, the flagpole, and then we can see that the wicks are buying kind of support underneath this, underneath these candlesticks. So there's lots of buying support under here. A lot of buyers, not many sellers. That's what the wicks are. Every time it went down there, it reversed very hard. We've got engulfing, bullish engulfing, the bullish candle, and then the bearish candle. The candlestick here, the body, is completely engulfed by the one after it, which is this guy. This is typically a down day. Doesn't have to be, but it's typically a down day, and then it comes down. It has a sharp reversal and it goes up. So it gaps lower, goes out throughout the day, and then ends way up higher. And the body engulfs the one before it, and this means that it's either a continuation pattern or a reversal pattern. This one here is called a bullish piercing, which means that it pierces. This is the open, this is the close. It opened here, it gapped down, and then it went all the way back up and closed here above the 50% way on this candlestick body, which is indicating a reversal pattern. So we went over engulfings, wicks on the bottom, bullish piercing, cup and handle patterns, pennant flag patterns, all these things. If you want to be a pro, I mean, not literally a pro, but if you want to be good at technical analysis, what I would do is I would combine everything together, use all of those signals together to get a better, cleaner, and clearer and a higher probability pattern or signal. Look for candlestick patterns within large patterns about to break trend lines. This gives you the highest probability of success, but are oftentimes very rare to find. I also tie into this value and market conditions to increase the odds of success. So there were some very rare opportunities in 2020 that I had found that tied it all together. And I'm going to show you one of those opportunities. It's SM Energy. It was current price in October 19th is when I did this, was $1.54. It came down, and you could see this thing contract into a very large pennant formation. One thing that, if you're learning technical analysis, is the larger the pattern, the bigger the move to the upside, potentially. So this is a monster pattern. Over a decade-long pattern. It was in the highs of like $86 all the way down to $1.50. And looking at it, when we zoom in on it, because I had done this in October 19th is when I did this, we have these large up candlestick moves, and then the slow leak off of sellers with the small down days. We have a wick on the bottom. It's a reversal pattern. Boom, we've got buyers down here because it reversed. Buyers are there. Came down, bullish piercing. Buyers are down there. Came back up with a lot of momentum. We have a downtrend line here. We came up, hit our head on it, came back down with very small leaking out sellers here. This is the dead period that I've got circled here. I was a big buyer down here. So what we're doing is we're combining a trend line. We're combining short-term movements, which is the wick on the bottom, the bullish piercing, the large momentum change. We've got a low down here. I was betting that this was going to be a higher low right here. We have the buyers starting to equal the sellers, and the contraction of the body, the opening and closing prices, which is the body of it. So we had all of the right signals here to go long. And that's where I went long. I went big right in these next couple of days here at $1.50. And that's what we look for. The problem is, this is the problem. These patterns don't present themselves that often. It's very rare to have a gold to oil ratio that happened to be in the 50s or 60s. This thing pulled all the way back. We had it at the tip of a very large decade-long pattern. We had the signals of momentum changing with the big up days and then the small leak off of sellers. We had wicks on the bottom. We had bullish piercings. We had big up days and then the small little pullback, and then the equaling of the buyers and the sellers right there. It's like, man, this comes super rare. So I wanted to show you one opportunity that I took advantage of. Maybe there's more out there in the market that you guys can take advantage of if you find them. It's just they're rare to find. Another thing with SM Energy is we had a confluence of information. Other oil companies all possessed these types of chart patterns. So it was a kind of a once in a lifetime setup where they all possessed it, the whole sector. Energy service companies, exploration companies, they were sold off to just massive levels on the downside that I've never seen before. And it was a very rare opportunity. If you join this channel, I'm going to continue to look for opportunities like this. I will share that with everyone on the channel. And if I see them, I can share it. But right now we're looking at upward moves. We're in uptrends and we're still early in this game. The valuations are still cheap. So I still like a lot of these investments. If you guys can see companies that exhibit these traits, if it's a technology company, it's probably not going to exhibit traits like this. This is mainly commodity type companies because they move with the price of the commodity. And commodities can be very oversold. They can be very cheap. A technology company typically sets its own price. So if you see a technology company getting driven into the dirt, it's probably because they're not a good company. Commodity companies are a little bit different. They cycle up and down over time. And you get these absolute incredible opportunities in commodities, and they can move very quickly to the upside when you find them. So if you guys like this content, give me a thumbs up. Hopefully you learned something about technical analysis. Leave some comments below if you guys have any questions. And thank you for listening. This is Finding Value.